Alright, welcome to another session. We'll be talking about time frames on this session and how we use the multi-time frame to analyze our charts. So, personally, we use the daily. We start our time frame from the monthly, the daily, the weekly rather, the daily. We use these three time frame for direction. Now, when we say direction, what I mean is if we see the weekly do a break of structure or the monthly do a buy break of structure, we know that we are bullish on the monthly, weekly, and the daily. Hence, overall, we are buying. Okay? Direction. Now, we use the 4 hours time frame and the 1 hour time frame for confirmation entry. Sorry, for direct entry. Direct entry, and we use the 10 minutes and 5 minutes for confirmatory entry. Yes, so this is it. The 4 hours for direct entry, 1 hour for direct entry, then we use 10 minutes and 5 minutes for confirmation entry. Now, like we said earlier, the monthly, the weekly, and the daily, we use it to get direction. Now, what does this mean? I'm going to have it put on this corner and then we're going to explain more on it. So, let's say we see the monthly do something like this, a sell break of structure. Now, we are expecting the next month to retrace into the other block, and if we see this, it's simply telling us that okay, maybe in a month or in a week we're going to have it buy. Or let's say okay, now the month has done the break of structure and the monthly has come to retest the other block. Now the next month, what we can expect it to do is to sell. And because we know that we've seen a sell break of structure in the monthly, the buys we are seeing are short term because it's like counter trading, and you don't hold counter trades for a long period of time. You hold your counter trades for a short period of time. So overall, we are bearish because now the monthly has shown us a bearish structure. So we want to look for heavy sales or more sales on the daily time frame, the weekly time frame, and then when we want to take our entry, we want to see 4 hours and 1 hour give us some entries within the daily time frame or the weekly time frame, and then just to confirm, we want to use the 10 minutes or 5 minutes to see another structure in the 4 hours or 1 hour structure. Alright, so I'm going to just go into explaining it graphically to you guys. Now, say this is like we were doing earlier. This is now the daily time frame. Let's say this is D1 daily, and now we've seen price come to retest the order block. Now it could be PY1, PY2, or PY3, any one of them. But now the fact that you've marked the order block, the first thing you do is, okay, let's just do it. You've marked out your order block, right? Now, what you want to see happen is, if this is the daily chart, let's say, yes, this is the daily chart. You want to see, let me make it red. Okay, you want to see 1 hour or 4 hour come into the order block and do something like this, break of structure. Now, if you can get 1 hour, 4 hours to give you a break of structure inside the daily order block or the weekly order block, then it's a signal that, okay, what we are seeing is a possible sell entry. So what happens next is you mark the 4 hours or the 1 hour order block, yeah, inside the daily order block. So I'm going to change the color. So let's say 4 hours we use black. So four hours, 4H. Alright, so now you've seen the 4H do a sell break of structure. Now you mark the other block of the 4 hour. Now what you are expecting price to do is to come into one of the POIs. So let me use the Fibonacci tool. Alright, so what you're expecting price to do now is come into either PY1, PY2, or PY3 and then drop heavily. So this is we taking it directly from the higher time frame. Now what we're expecting price to do is, let's say in 4 hours it then comes to PY2 and then probably we have our sell limit already there. We see it drop somewhat like this. So this is how we multi-time frame. Now if you look properly, you will see that okay, let me use the Fibonacci tool now. You can see here that when I put the Fibonacci tool on the daily time frame to mark out the order block, the 50% level is the same level that the 4 hours POI2 is. So this is what we call multi-time frame synchronization, meaning the level at which price is currently giving a reaction to possibly sell from is also in synchronization with the daily level and the 4 hours level, making it a high probability point for price to tap into and react. Now moving to our next topic, we'll talk about Killzone, time and price, synchronization, and we'll come back here. So this actually has to do with, this also can cover for our entry models. So understanding the multi-time frame can help you with the entry models a lot. Now, the daily, weekly, monthly for direction, the 4 hours and 1 hour for direct entry, then 10 minutes, 5 minutes for confirmatory entry. Now, I'm going to try my best to cover 1, 2, 3, 4 topics in this video. So, because if I end this one and go to the next, you may probably not get it. So I do not want you to miss the synchronization of everything. I want it to sink in. Now, the kill zone is usually 1 hour before the opening of a session. Now, here we trade the London and New York session. Okay, just because of the fact that then there is the Frankfurt, or you can say Europe session. Yeah, so Frankfurt is just a 1 hour difference from the London. Yeah, and then there's New York. So these are the sessions we trade. Alright, so having this here means that, okay, since we trade Frankfurt, the Frankfurt session starts according to my local time, 7 a.m. or 8 a.m. according to my local time. When daylight saving is enabled, it's 8 a.m. When it's not enabled, it's 7 a.m. Now, Frankfurt is 1 hour just before the opening of London session. So we can say the kill zone of London session is Frankfurt session. Now you'll be wondering, why is it talking about kill zone? What's the importance and relevance of kill zone? Now, just like your regular banks, we all know that the forex market is the financial market of all the global banks and financial bodies around the world. So business hour starts 8 a.m. everywhere, anywhere. Now, but we all know that workers do not get to the office by 8 a.m. in the morning. They get there an hour before, or 30 minutes before, or just before they start. Take for example your banks. Now, once it's past closing time, or let's say it's past 4 p.m., the bank no longer receives fresh deposits. Now, that doesn't mean that the bank is no longer active. It simply means that it's trying to handle all the transactions for that day, right? So most times, if there be any backlog of transactions, it is moved into the new day, and just before the opening of business to start transactions for the new day, they try to clear off all previous day transactions. That is why most times when you open your charts, it's 1 hour before the session opens and you are seeing heavy transactions, you are seeing heavy price movement, and you are wondering, why is this happening? This is because previous day transactions that are still backlogged have to be cleared, and now they are balancing accounts and all of that, and people are beginning to place their bids and orders for the new day. So all of those things or people that have probably placed their orders overnight, now it has to be imputed into the system. All of that happens most times 1 hour before the opening of a session. So market structure shows us most of the time entries around the kill zone. So the kill zone is 1 hour before the opening of a session, and this happens every time. Most times you will get your entry 1 hour or by the opening of the session, or 1 hour after the opening of the session. I mean, when the bank opens, it's open for fresh deposits. So there's high level of transaction coming in. I need to understand this, because it is not we that move the market, it is the financial bodies. Okay? Retail traders do not move it. I need you to understand that. So because we know how the institution functions, we know how to strategically place ourselves at the timing that the markets will move, because what moves the market is money. Money is volume. So we need volume to be infused into the market, or should we say money is the fuel that moves the market or that drives the market. So we need money to get into the system to move the market. As such, once it's 1 hour before the opening of the session, you will start seeing some structures form. Maybe by the opening of the session, you could now see the structure clearly. Then 1 hour after the opening of the session, if you did not see the structure clearly, 1 hour after the opening, you will likely see it better. So the timing at which we look for entries are opening of a session, 1 hour before the opening, and 1 hour after the opening. Hence, in my local time, that for me for Frankfurt is so for me for Frankfurt opens, let's say 8 a.m. So the Killzone for Frankfurt will be 7 a.m. and 1 hour after the opening will be 9 a.m. Now for London currently opens in my local time 9 a.m. So the Killzone for London is 8 a.m. and 1 hour after the opening of London is 10 a.m. So my time. Now for New York session opens currently in my time 2 p.m. So the Killzone is 1 p.m. and 1 hour after the opening of the session is 3 p.m. So what that means is I'm looking for entry by 1 p.m., 2 p.m. and 3 p.m. Okay? Now, if you can understand this, it helps you to narrow the timing at which you want to get into the chart. From just randomly taking setups, now you know that, okay, high probability setups come in from 7 a.m. Give me a second, please. 8 a.m. and 9 a.m. That is for Frankfurt, which is Europe. Now for London, entry comes by 8 a.m., which is Killzone, 9 a.m. opening, then 10 a.m. 1 hour after the opening. Because now you wonder why we are adding 1 hour after the opening. 1 hour after the opening means more money is in the system now. So any structure that might have showed up during the Killzone, we now have volume to drive the market to our take profit level. Does it make sense? I believe it does. Now 1 p.m. which is a Killzone, 2 p.m. entry, then opening time rather, then 3 p.m. 1 hour after the opening. Yes. So if you can understand this, it increases and reduces your timing in the chart. So if I am not seeing setup 7, 8, 9, 10, I'm chilled up, yeah? Then New York session 1 p.m., 2 p.m., 3 p.m. So if within these 3 hours I'm not seeing setups, then I let it be. But I guarantee you, if you actually trade structure properly and you follow all my instructions in this course, that is a masterclass, and maybe my previous training, you would understand how it works better. So Killzone is 1 hour before the opening of a session. High probability setups can show up at this time, and so now let's relate this and the entering time frames to what we are seeing on the chart. Now let's say this setup shows up. Now you see a break of structure and price approaches this zone by 8 a.m. Now 8 a.m. that's London Killzone, that's Frankfurt session open in the morning, and the higher time frame, which is the daily, has given you a sell break of structure. This is a very high probability setup that when price gets here, it's going towards drop. So because the timing is right and the price is at 50% of the daily order block and has done a sell break of structure, is a good zone. Then 4 hours has done another sell break of structure in confirmation to this level. It's a good key level, or makes your POI a high probability setup that the trade will play out. Okay, now you take your sell from here, and just like magic, it runs your take profit level, and done and dusted. So all you just want to know is what time frame are we using. So you want to see the daily, the weekly, or the monthly, and sometimes it may not even be the daily level, it may be the weekly level. So you want to have those key levels on the higher time frame POIs marked out in your chart. Okay, sometimes it may just even come for this POI1, and maybe 1 hour will give you a sell break of structure here, and it will just drop. Yes, it does that a lot. Okay, now moving on to then this could also, moving on to our next topic, entry models. Now you know our time frames we use in trading. We use the weekly, monthly for direction. Then we use the 4 hours, 1 hour for direct entry, 10 minutes, 5 minutes for confirmation entry. So now let's talk about entry models. Direct entry model 1. Now direct entry model 1 is what we just talked about here. Yes, that's the reason I did not end the video. I wanted everything to synchronize. Now direct entry is what we just talked about here now. Picking it from the 4 hours break of structure and retest, dump. It should always be in alignment with a key level in the higher time frame. Yes, or this could also be 1 hour. Sorry. This could be 1 hour too. Yes, as the case may be. So the black represents this structure here, and the red represents the daily. So 1 day candle, this is it. Then zooming into the 1 day, you see this in 1 hour. So this is like a direct entry approach to the chart. Now what is confirmation entry? Confirmation entry is, I'm going to do something now, still on this one, but now let's zoom into this. Okay, so 1 hour has done a sell break of structure, right? Now this same order block here, we're zooming it here, you mark it. Okay, now you mark your order block in the 1 hour. Now what you do now is you go to the 5 minutes time frame. So you go to the 5 minutes time frame or 10 minutes time frame, as the case may be, and you start seeing price retrace up into this level. It retraces up into it. Now it could come here, not even tap into POI2, and then just take out this previous high, and you see a break of structure like this. Now this is 5 minutes. Okay, let me change the color to something. Let's use blue. Okay, the blue may not show. Let's use green. All right, so 1 hour. Okay, then the green is, let's say, 5 minutes. So 5 minutes. Let me change the color to green. Alright. So what does this mean now? What has happened here? This is a break of structure in 1 hour, and now you zoom to 5 minutes or 10 minutes, and you see the price come into the order block, you are not taking it at either PY1, PY2, or PY3 directly, no. You are not putting a pending sell limit at any of this level. You are waiting for price to push into it, okay, and create a break of structure inside the order block. Inside. The reason I use this one in particular is because sometimes a lot of people will tell you, because this break of structure did not happen inside this 1 hour order block, they are not taking it. As far as it swept into it, and then you saw this break of structure happen, it's likely that it has done what it wants to do, because don't forget, this is also PY1. Price could pick from 1 hour time frame PY1 if you're taking direct entry to just sell. But now you're waiting for confirmation, and this is enough confirmation for you. Okay? So you mark the order block now in 5 minutes. Alright, I bet you time will come, you wouldn't even need to mark it, you just cite it, easy peasy. Now you mark the 5 minutes order block, and obviously confirmation entry advantage is you can use a smaller stop loss, because I mean this order block here is definitely smaller than that of this. So if you're going to use a stop loss to cover all of this and that of all of this, you would use more here than here. Okay, so now what you want to wait for price to do now is, you've seen this 5 minute sell break of structure. I always advise people to use the PY1, put your sell limit here, and let me see if I can, okay, put your sell limit here, then let's use our, yeah, so yes, your 20 pip stop loss if you are trading gold, then 100 pip take profit, and price would definitely do this. Tap into it and drop. Yes, so this is for confirmation entry of 10 minutes, 5 minutes, and this here is 1 hour, 4 hours direct entry. So you just plot either PY1, PY2, or PY3 on the 1 hour, 4 hours and just take your trade. Okay, now I do hope that this explains direct entry and confirmation entry quite clear. So that being explained, when you want to take trades using market structure, if you are taking it from, we zoomed into this 1 hour time frame that was in the daily order block. Remember, this drawing here was this break of structure here that we just tried to zoom in here and go into a lower time frame. So we don't just pick random 1 hour or 4 hours time frame. We pick that is in synchronization with the daily level or weekly level or monthly level. The POIs we take our entries from must be in synchronization of the higher time frame levels. It could be the open close of yesterday's candle. It could be the okay, let me take you guys slow and steady. I do not want to rush you through it. Okay, so important thing you need to take note of is time frame we use here is monthly, weekly, daily for direction. 4 hours, 1 hour direct entry, 10 minutes, 5 minutes confirmation entry. Now we've talked about time and price synchronization, meaning when you see the break of structure and this thing happens now around this time you want to see setups 7, 8, 9, this happened around that time, it's high probability setup. But it happens around 1 p.m., 2 p.m., 3 p.m. New York session. That's for my time locally. You have to go and figure out when 8 a.m. is in what 8 a.m. will be in your time wherever you are in the world. Okay, so this explains all of that. Now time and price, meaning the structure has given you a go ahead to take the trade. That okay, this thing has shown us an indication that it wants to sell, and now the price is right, the timing is right. You can pull the trigger now, you can place the limit, you can execute the trade. Okay, so on the next video we'll be doing a top-down analysis. Okay, then when we do this, we will now go to our chart and do a bit of practical work. Okay, so we can say we have successfully covered multi-time frames, Killzone. We have talked about time and price synchronization, Now, we've also talked about the entry models. Okay, so on the next video, we will talk about um, how we do top-down analysis, or how to do a top-down analysis. Then from there, we will go into the charts and do a bit of practical. Okay, then we would finish up with the extras we want to give all our students. And I bet you this is one of the best courses out there you will see.